Hey guys, what's up? So on this video, I'm going to help you understand my philosophy of 3 best mutual funds that you can buy in the market right now. So will I tell you the specific names? Yes and no. Okay, so please understand, I will tell you the construct or structure. Now see, that's not the point. The point of this video is that any person on YouTube can come, they can just hold a camera and start giving gyan that, you know what, buy this mutual fund, or I do 45 lakh rupee SIP every month in mutual funds and you will become Amir and all that bullshit. Okay. Most important thing that you need to remember as a viewer is to check the credentials of the person whom you are taking advice from or whose analysis you are understanding. So in the interest of full transparency, let me also reveal my performance. Okay. So I created this particular fund in January of this year. You might have already seen the announcements many a time that I'm going to create like a $1 million portfolio in the US market. I've done it, and here is the fund performance. And then I will go ahead and compare it to the performance of major mutual funds in India, and then you can see whether my advice is worth considering or not. Okay. So this is my fund. Right now it generates roughly around 25% returns. Some of it has been booked. So for example, I have booked roughly 7% profits, and there are roughly 16.5% unrealized gains. Okay. So in the last, and this 24.68%, this is year till date, right? So YTD return from January, right? So this is the performance. I created this portfolio in January of this year, and this has been the performance so far. Now let us start comparing it to top performing mutual funds in India. So the name that comes right at the top is Parag Parikh Fund. I respect their philosophy of investing. They have done exceptionally well for investors. If we study their 3-year, 5-year performance, they have done really well. Why? Because back in 2020, when Parag Parikh started to make a name for itself, they were a very small fund, but over the years, they have grown manifold. So long story short, this is the performance of PPFAS, right? That YTD, year till date returns as of July 17, 2025 is 4.61. Okay. This is bad. Now, if we consider short term, 1 year, again, the returns are not good. 3-year returns are fine, right? So this is how we will encapsulate that. Now let's go to quants, right? So quants again was a market darling. They had a lot of people, a lot of you might be investing in quants. So this has been the recent performance of quant mutual funds, right? So whether you consider small cap, multi cap, mid cap, ELSS, flexi cap, value fund, everywhere lossy loss. Okay. So on a YTD basis, it's a loss. 1 year basis, it's a loss. So people have actually lost money by doing mutual fund SIPs or whatever in these funds. Okay. So this is there. Now you'll say that, okay, you're handpicking like, only Parag Parikh and, quant. What about like other funds? Okay. So let's look at random names, right? So let's look at Bandhan, Motilal, SBI, ICICI, Franklin, etc., etc. And you will see this is like 1 year return. Okay. This is not YTD. So 1 year mein, this has been the performance. Now you'll say that this is not like, some exceptional performance. So now the point is that if I compare like my performance or my fund's performance with any of these funds, I have done better. Now I'm not making this video to boast. Okay, fine. I'm making this video a little bit to boast. But see, there is like an important message that I want to give, and I just want to talk a little bit about the genesis of my fund. Okay. Now, up until last year, I used to actively tell people that, you know what, boss, it's not that complicated for retail investors to beat mutual funds if you apply basic common sense, because there are some structural advantages that we have. For example, one of the key reasons why my fund is delivering like 25% return, so to say, in the last 6 months is that I bought the April dip very aggressively. Almost 60%, 65% of deployment of my fund happened in that April dip. Now, the moment I tell you, there will be a bunch of geniuses who will jump up. They will start saying, oh, you should not time the market. Oh, you should not do this. Oh, you should not do that. Bhai, kyun nahi? Right? I mean, it's like common sense. If the market is at a discount, why would I not go and buy more? Vice versa, if the market is overvalued, why would I go and buy more? It does not make any sense. There is no reason for me to unnecessarily keep on pouring money in SIP format, this format, that format. Okay, so this is like a genuine, honest conversation that I'm doing with you. People will just keep on giving you random gyan ki aap SIP chalate raho, zindagi aake SIP ban jayega. See, here is like a powerful chart that I will show you on SIP also, because many people just do not want to understand any contrary viewpoint. They're like, yaar, you know what, bas like yehi market acha hai. Just keep on doing SIP on 1st of every month and you will become like rich. See guys, I mean, just use common sense and use your head. Think about it, that if almost all investors are doing SIP in index, why would index give you an alpha? It does not make any sense. Have you seen any strategy in the world which is overused, where which is designed for like retail investors, and retail investors are making like crazy money. SIPs are becoming what ULIPs were, right? Like 20, 30 years back. If you go and speak with your dad and ask him that, were you pitched like a ULIP plan from a family member, extended family member? So they will tell, your dad will tell you that, yeah, boss, yeah, like, मेरे मौसी के लड़के ने खरीदवा दिया था ULIP or whatever it is, because LIC वालों के commission बनते थे, right? That was the point, right, with ULIPs. Now these days, SIP have also become a commission-oriented product. I'll just leave it at that. I will not belabor this point, but here is data point that I will ask you to remember, okay? So let me show you like Nifty 50 returns, okay? And here you can divide this Nifty chart, right, in SIP format into 3 phases, right? So phase 1 will be somewhere around like 1999 to 2010. Phase 2 will be 2010 to roughly 2020. And this is phase 1, this is phase 2, and this is phase 3. Now let me show you like something very interesting, because many of you would be operating with the viewpoint ki SIP karte chalo for the next 20 years and you will become like, next Adani or Ambani, okay? It's not going to happen. It's like a very stupid strategy, okay? And let me show it to you. For example, here you will see that Nifty was at roughly 1000 points, okay, in this phase 1. Then it went to almost 6x or 5x, 6x, okay? So this is 5x, 6x. So I'm writing 5x here. Now let's study this phase, right? So roughly 5000 pe tha, right? And 2020 tak it became 11 and a half. So this was roughly 2x. Here it is already 2x, right? Now the point that I'm trying to tell you is that when people start telling you all these stories that you invest for 20 years because 20 years mein SIP mein paisa bani jata hai and all that stuff, see guys, basically like this is the phase that they are talking about, right? Here a lot of money was made. This was a good phase for the market. This was an average phase of the market, right? So yeah, please remember this. This is a very basic point, right? Now you will say that no, I will go and handpick like some great mutual fund. For example, Parag Parikh kharid lunga, ya Quant kharid lunga, ya Axis kharid lunga. Okay, see, the point is that eventually money or some part of that money comes into these instruments only. So this is the concept of the asset quality that the mutual fund in which you are investing. For example, let's say that you are investing in Parag Parikh, okay? Now that is the asset that you are buying, okay? But Parag Parikh also buys some underlying assets. So what is the underlying asset that they are buying? So they are buying Indian stocks, okay? And they are also buying like US stocks. For example, one of the key reasons, right? Again, going back to the previous chart that I was showing you, that one of the key reasons why Parag Parikh gave exceptional returns to its investors was that it invested a chunk of its money, almost 30-35% of its portfolio was in US stock back in 2021. And then there was 2021, 2022. There was a massive rally of these stocks, right? And that is what generated returns for Parag Parikh. Okay, so now people who are new, they will get a little bit confused. So let me just break down this topic. See, whether you buy whatever fund, X, Y, Z fund, call it Parag Parikh, Quant, HDMC, Falana Dhimka fund, right, or whatever, okay? Now, what are these funds doing? Well, they are going and buying securities at the back end. For example, they might be buying US stocks, okay? They might be buying, let's say, Indian stocks. Some might be buying Indian small caps. Some might be buying Indian mid caps, or a combination of that, right? Now, a fund will only make returns if the underlying assets that they are buying, be it small cap in India or mid cap in India or US funds or whatever, if these underlying go up in value. It's not as if that, what, Parag Parikh is like some great fund, or like, Access Mutual Fund is some great fund, etc., right? So this is like a very important point that you need to understand. And here I am setting the ground for you to understand the situation that, see, if the underlying which your mutual fund is buying is not good, you are not going to make money, right? This is a very important fundamental point. So now let me start answering the question with which I started the video, that, hey, what are the 3 best mutual funds to buy? Now, I will tell you the construct, how you need to think about it, right? And there are 4 or 5 key points that you need to think in terms of picking the top 3 mutual funds. And I will tell you my strategy also. I will tell you 3 funds that I'm building and picking, okay? Okay, so if you listen to this section and the next section that I'm talking about, it will be very insightful. You will learn a lot of things, and it will give you a different direction or different way of thinking about mutual funds. Mutual fund investing is not about कि आपने Nifty 50 खरीद लिया, I'm just doing like SIP like a crazy person or whatever. No, that's not the point. You first and foremost need to understand pillar 1, which is that what is the fundamental of a good mutual fund, right? For example, and there are 5 key features that I will define. The first key is that the asset quality should be great. For example, if you're picking, let's say hypothetically, Indian private banks, Now the asset quality of Indian private banks is generally good, right? Now you pick whatever good asset quality you feel. For example, according to me, US tech stocks have great asset quality. They are going to be leaders in terms of business generation in the next 10, 15, 20 years. They will continue to lead, right? Companies like Netflix, companies like Meta, all those companies. So you define whatever that good asset quality is. Second is that you need to think about commissions, that where your commissions are low. For example, if you are building your own mutual fund, which I highly recommend that you do. For example, this fund that I keep talking about, what commissions do I pay? 0%, because I build and manage it. But if I were to just simply go and buy like Access, Fanala, Dinka, Chip Fund or whatever it is, I'll have to pay commissions. So this is a fact. Right now people would disagree with this or whatever, right? But this remains the fact. Third key point is that your mutual fund returns really depend on your point of entry. And let me give you an example. I think that will make this lecture more colorful. So here is the example of mid-cap 150 index, and people who have been a part of my YouTube member community or my students, you know for a fact that we picked mid-cap 150 somewhere here, right, in this consolidation zone, right, in 2022, start of 2023. And then it gave roughly 100% returns, right, and we exited. So our point of entry was what, right? This was point of entry. Now, our point of entry was low, right? It was the market or the mid-cap, small-cap market during that time in India was available at value. And we bought funds during that time which were trading at value, okay? And then we exited when the value was high. But it's commonsensical to think that there would be people who would be investing here also, here also, here also, here also. SIP chala rakhi hongi logon ne, right? And for the last 1.5 years, what has happened? Nothing, right? I mean, it just went down, it went back up, and you have lost in the last 1.5 years, you have just lost 1.5 years. Okay, so no returns have been made here. Whether you ran it in SIP format or whether you ran it in like bulk format, however you did it, it's very unlikely that you would have made a lot of money here. Okay, so what I'm helping you understand is the concept of point of entry. If your point of entry on any mutual fund is bad, you will not make money, right? And this is important. So you should invest in whatever your favorite mutual funds are when the market is cheap, or at least you should pick like one mutual fund where you would do market timing. Okay, so for example, this fund one that I've created, what I do is, and this is my first mutual fund, right, that I myself have created. So here what I do is that I have created like a $1 million portfolio. Now, if you don't have that kind of money, it's fine. It's not a race that we are running here. If your fund is, let's say 10 lakh rupee, it's fine. Just call it like a bulk fund. So I call it a bulk fund, right? And on this bulk fund, what I do is that I only add money to this fund when the market is cheap. So I hope that you guys understand that what is the meaning of market being cheap. For example, I bought a lot of QQQ or SOXX, which is semiconductor index, NASDAQ, all these different good quality indices when the market itself was cheap, and this is the fund one that I've created. Okay, so this is one. Second is that sometimes what happens is that certain industries become cheap. For example, right now one could argue that IT industry is cheap. Now, many would disagree. Many would say that IT has no future. I'm not betting on IT like revolutionary growth on IT stocks in India. All I'm simply saying is that it is undervalued and there is a lot of DII inflow of money that happens. FI inflow tani hai, right? But DII inflow is huge. So at some point, there will be a swing that will happen on IT stocks. And if you have like that 2-3 year vision, it kind of makes sense to get this point of entry on IT stocks. So this is called as industry being cheap. Okay. Third is that there can be stock specific asymmetries. For example, if you go study my commentary roughly 1.5-2 months back, I was very bullish on AMD. Okay, AMD, which is like a stock in the US, it has given roughly like 100% run up, right? And yeah, so it has gone crazy, right? From that point, I still feel it's undervalued. Right now, I feel that Google is undervalued. So these stocks, there can be stock specific asymmetries, but it's very important to have a mutual fund where you are able to buy cheap point of entry or value point of entry. If you're not doing it, your mutual fund performance is going to be horrible. Okay, so that's how it's going to be. Okay, so then comes the fourth point, that always have some kind of cash to investment ratio going. For example, on this fund, you will see that I do 80-20. Why? Because this is a growth fund. This is a very fast and furious type of fund. It will go up fast, it will go down. So the beta on this fund is very high for me. So whenever there is like a market discount, what will I do? I will use my 20% cash reserve and pour it. So in case you are picking any mutual fund, be it whatever, Quant, Parag, Parif, this, that stuff, always link it to the market. Look at like, okay, if Nifty 50 you are getting it at like 10, 15, 20% discount, something like that, then you can be 100% invested. If the market is nearing all-time high, then keep like 80% invested. This is like crude way I'm telling you. This is not like, some formula. But at least for starters, I will do it, right? In case you guys are keen, I do run courses. In case you want to be a part of my community, definitely do check it out. Feedback has been exceptional. Students are extremely happy, right? I actually have built a lab in a way where I'm running this portfolio, so to say, where people can see everything that I'm doing, okay? So that is there. Fifth point, this is where we miss the bus, that we don't understand the concept of reinvestment risk. For example, right now, right, if you take a look at BTC, right, Bitcoin. Now, Bitcoin I bought at $85,000. Now it has gone up to like $120,000 within a matter of months. Now, great, I have Bitcoin in my portfolio. Now, let's say I sell 30% of my position. Where do I reinvest it? This is the biggest risk that we run. And now this is not just a Bitcoin specific risk. For example, if Bitcoin is the only asset in which I invest my money, I would hold it, okay? I don't know what I will do with it by booking profits. So that limits my options of investing. So now, if I have to just quickly tell you what is it that I'm doing. So I have created 3 funds, 1, 2, and 3. And this is where you can also understand from my strategy, right, as to what type of funds I'm creating. So number 1 fund, I call it a bulk fund, okay? Here I only buy when the market is cheap. That's it. Okay, so for example, this fund, right, which is outperforming 99.99% mutual funds in India, is a bulk fund. At the time of making it only, I had announced. The second could be a sensible or smart SIP fund. Now, what is a sensible or smart SIP fund? For example, let's say that you are in August, okay, and you see that the market on 1st of August is trading at, let's say, more than 5% discount. Then you invest whatever 100% money you wish to invest in that fund, right? 100%. For example, if your monthly allowance to invest is 1 lakh rupee, then you go and pour all that 1 lakh rupee, okay? Because you are buying the market at certain margin of safety of 5%. Now here you need to create like a list of, let's say, I think 25, 30 stocks. If you can do that, that's good enough. How to do business analysis, how to figure out what are good companies to own. These 25, 30 stocks should fulfill criteria 1, which is high quality assets. So have a list of these 25, 30 stocks. And here I would recommend that you kind of have like a wider array, right? I mean, especially across markets. For example, India, US, you can have like 50-50. You can also add BTC in case you like. So this is something that can be done. Now, I also have designed like an SIP fund. In case you are interested in following along, then you will find the links in the description comment box. But long story short, this is how I would design like mutual fund 2. Mutual fund 3 is my retirement fund. Okay, so retirement fund or like legacy planning fund. So this is something that I will give it to my kids. And here I have a very simple investment thesis, and the criteria is that those 4 or 5 things wo to basic si cheeze ho gayi. But these are your next gen companies, right? So I'm creating like a portfolio of companies. For example, ASTS, right? So which is a space exploration company. There is a company called as TMDX, which is into organ transplant, right? And they use AI in terms of facilitating the entire process. It's a very interesting company. Read more about it. There is Beam Therapeutics. There is Viking Therapeutics, which are into CRISPR technology. Now, all these tech companies are going to be the next gen leaders. Now, I'm not saying all of them will be there. Maybe I'll buy like 20, 30 companies and 10 of them will die, okay? But the remainder 15 will become like maybe hopefully next Amazon, or at least a few of them will become like next Amazon, and they will offset my losses. So this is what my retirement fund or kids fund portfolio would be. And just to add, and this is my third mutual fund, and here I would not do too much tracking, not too much, right? So here you can go and explore like frontier tech companies, which are high growth, high impact type of companies. Bitcoin again can be a good part of this, right? I'll make a separate video on Bitcoin. Here, the amount of tracking required is more. You track it to the market. Here, you have to identify companies at an industry / segment level and add it, right? So this is how I would design my 3 mutual funds. How much commission would I be paying? 0. Now, let me quickly answer very quick FAQs. Do I know more than mutual fund managers? No. Is my performance better than them? Yes. Okay. Why? Because I'm using basic common sense. On top of that, I'm saving commissions. Okay. I'm paying the least possible taxes on this strategy. I am diversifying my portfolio. And if I'm doing all these basic exercises, it's not as if that you need to be a genius in terms or have a PhD in finance to go and build these type of 3 separate mutual funds for yourself. You don't need to be a genius, you don't need to be a financial wizard, and you don't need to keep tracking it. You need basic common sense, right? And you should be patient, right? There are inherent advantages that retail investors have. If I did not have those advantages, of course, I'll not be beating like mutual fund managers who have like 20, 30 people team, okay? And yeah, so how am I able to do it? Well, because I'm using common sense. I'm using things that are in my advantage and I'm using them sensibly. For example, I have no need to unnecessarily keep on investing money into the stock market. So I can wait whenever the market is expensive. I don't need to do that. Can I bulk buy? Yes. But would a mutual fund manager keep on sitting on a lot of cash for 6 months? No, it becomes a problem for them. So this is an issue that mutual fund managers have. I don't. I have small capital. So like whatever, like $3-4 million if I'm investing, it hardly matters to the market. But if someone like Parag Parekh is buying like thousands of crores of some fund, then it's a challenge. Okay. So all these advantages are there. So as a retail investors, you must be aware of it. Therefore, I made this video. I hope you enjoyed it. In case it gave you insights, do consider subscribing to the channel and liking this video, and I'll see you soon.